All right. Once again, everyone, thank you so much for joining into today's session. Um, as mentioned, today we are actually looking at regulatory frameworks, and this session is actually going to be headlined by Elias Omondi. Elias is not a stranger to most of you. I think even all of you know who he is. I think his career speaks for himself. Elias is a former regulator as well at the Insurance Regulatory Authority of Kenya. And in currently he is the principal innovation for resilience at FSD Africa. And in today's context, Elias has advised over 20 central banks and insurance regulators globally, supporting the design of regulatory frameworks, statutory templates, and innovative disaster risk financing solutions. So I do not want to take up too much time. I know he has just joined us, and I hope that maybe if he needs a minute, he'll let me know. But I know that he is ready for today's session. So I want to hand it over to Elias. Elias, kindly take it away for us, and thank you so much.
All right, thank you very much, Alex, and it's a pleasure to connect to all of you guys. And if there's anybody that would really want to join this session, I would encourage us to kind of push them to join. Today, I would really want to do some deep dives, particularly when we talk about regulating for innovation. And one of the areas that I'll be talking towards is how then do we apply regulatory sandboxes. So I will be very specific. Also, in terms of context, I'll try and do uh, a proper deep dive on what regulatory sandboxes look like, particularly in context with the insurance space. So in this case, then I'll just share my screen. You can let me know if you can see my screen.
Yeah, it's okay, Elias.
Yes.
I should put it on slide mode. Right, let me know if you can see it.
Yes. Yes. Yes.
Right, so thanks. Yeah, so I'll just go straight into it. And, I know most of us as regulators, we are currently in the process of developing either a regulatory sandbox or really looking at how what ways in which we can, support emerging innovations within our ecosystems. And this series that we are going to start today, our goal is to span it over two sessions because this would be a very heavy context in terms of how then we look at regulatory sandboxes. I would also further do a deep dive on, how then do we do risk assessments because from a regulatory standpoint, it's always important to assess risks. So we'll also relook at how then do we, in context, do regulatory risk assessment, particularly when it comes to regulatory sandboxes or any innovation that comes through the door. And lastly, we look at different stages and contexts, including reporting that a regulatory authority should be able to deploy. So the reason why this is important is really for us to have a perspective. What do we really need to do when we are looking at parameters for a fit for context sandbox? Now, what do I really mean by that? Most of the time, from the principles of regulation, we really focus on what we call proportionality and fit for purpose. Now, the fit for context will look at those two things. Is our sandbox proportionate to the needs in terms of where our purpose as a regulator is at? And we know regulators have different purposes. It could be in terms of financial stability, but also importantly in issues around market development. So if you look at it from a fit for context perspective, are we developing the market? Two, are we ensuring that we maintain market stability? Now, fit for context takes cognizance of avoidance of what we call regulatory arbitrage. And what do I really mean by that? You don't want to create um, uh, um, a model that will kind of expose the market towards regulatory arbitrages. And what do I mean by that is whereby a company would use the channel of sandboxes not to comply with the rules or to comply with the requirements of the law, because in this particular case, there's a place that they can use, or there's an avenue that they can use to get their context around it. Now, what am I intending to discuss in this series of sessions that we are going to have? I'll look at 5 main things, but importantly, we are going to do a little bit of training in terms of sandbox application risk assessment tool. So we will design a tool. We are going to try and deploy that tool for those regulators that already have some form of a sandbox, or the people that are preparing to develop a sandbox or are in the process of implementing the sandbox. How then do you assess different risks that an application would have? And that is the process most of us as regulators tend to do. But before that, then it will be important to understand sandbox objectives, sandbox design parameters, and really look at different elements, materials, and parameters that are important for the context. And thereafter, after this series, we should be able to wrap up and kind of do a way forward towards the sandbox framework. Now, this will really align well with the team that is currently working on on regulating for innovation. And as I mentioned when we start these exercises, that I'll be happy to work with different teams to really come up with a blueprint that can be developed and can be used across different markets when it comes to sandbox development. Now, I would really want to kind of pick it from the context of some work that we've done as FSD Africa. Last year, we were privileged to develop a toolkit that we usually call it FSD Africa R3 Toolkit. It's available in our website. And this toolkit kind of provides context of the broader ways of regulating for innovation. And it kind of stipulates a couple of tools that could be deployed by different regulatory authorities across the continent towards which they can, enhance innovation. And the tool, this toolkit kind of provides a number of tools. And these tools are broadly in 4 categories: engagement tools, regulatory tools, supervisory tools, and monitoring tools. And importantly is that you can be able to access it and get into more context of what happens in each and with each and every tool that a regulator would want to deploy. So for instance, when you talk about engagement tools, it will focus on the existing industry and the potential entrants within the industry. And really this focuses around an open door policy around which you can engage the industry. So for instance, Uganda has a very good engagement tool whereby they do an industry newsletter. They have innovation workshops. I've seen that these has also been implemented in different jurisdictions. Further that also we have an area that focuses more on close bilateral engagements with non-industry players, kind of bringing in the entire ecosystem to discuss. Then beyond that, we have regulatory tools and supervisory tools that kind of looks at how then the evolving existing frameworks would respond to new risks. And these would be it technology risks, be it innovation risk, be it digital play risks. It can also look at different functions. Think about a company that is really looking into setting up an office whereby they'll be selling digital solutions, and they don't have, say, customer care experts. They are going to deploy AI to to support the existing ecosystem. There will be new players, and these would focus on things such as proportionality in terms of how then do we look at our licensing procedures, kind of looking at how then we close protection gaps and addressing issues around closing gaps that really are kind of increased through lack of regulatory clarity, issues around flexibility and sandboxing and test and learning approaches, and even looking at principle-based frameworks for customer outcomes. Now, what do we really mean by that? If you look at it from an inclusive insurance perspective, it's not only financial value, but most customers will focus on the experiential value. What experience do they receive when they are purchasing these particular products? Then we have different supervisory tools, and we will be able to develop a couple of tools in terms of kind of providing some guidance, and you can issue a guidance note on what really needs to be done. The issues around streamlining supervisory processes. So are we using SupTech? Are we using RegTech? And really building capacity and coordination. So again, these would really provide a lot of locus on what you can do. Then monitoring tools, whereby you can track innovation results in the market. We can have a results framework. As a regulator, you can develop a results framework that you can use to really focus on where the market is. Now, before we do that, then it will be important for us to understand what we call the Insurtech Lifecycle. And each stage has its own associated risks. And these will be important for us, particularly when we'll be talking about sandbox risk assessment, kind of a tool that at the end of this exercise we are going to develop for us to really use going forward. Now, you can basically divide the Insurtech lifecycle into three major phases. We have what we call the initial ideation phase, and that phase has two types of Insurtechs that will come your way, or innovators that will come your way. There are those guys that will knock your door and say, okay, fine, guys, I have an idea. And this idea is because I've identified a particular gap in the market, and I would want to start developing this idea into a solution. So it can be an idea, it can be a solution, and most of the time these guys kind of knock your doors. And if you look at it from the risk level, these guys are zero to low risk since they have no real customers and they are only being affected. They're only being affected by entrepreneurs. So they don't have a customer, they just have an idea, and they're trying to develop that idea. Then that kind of moves, because once a company moves from the ideation stage, then it goes into what we call a startup stage. And this is where you'll get a number of Bima Lab companies coming at this particular phase. So they have a team to support product development, and they would want to start initial testing of the product. Again, the key thing is that they still don't have customers. They are developing solutions, and they're thinking, okay, fine, we should be able to get customers. So in terms of regulators' risk assessment, then we would basically term those companies as zero to low risk, based on the spectrum of the impact that they would have to customers. Think about conduct of customers and treatment of customers fairly. So that's something that they don't have. Now, we tend to move to the next level, which is more on expansion to proof of concept phase. Now, here's where you'll get also a number of Insurtechs that are within Bima Lab and within your market will be at. Now, these companies are at growth stage, and also there are some companies that will be at scaling stage. Now, these are companies that are seeking seed capital to inject to hire new staff. They want to purchase new equipment. They want to expand their space, and they begin to serve a small amount of real customers. Now, that risk kind of moves to the next phase, whereby now you have medium risk, given they have a small customer base, and most of the time these people limitedly use their products. So again, the regulator really needs to start having some focus on what are they doing. Can we have some forms of discussion around that? Then we have companies that are currently scaling, so they have a growing customer base, they've kind of started receiving some form of profitability because, the costs around revenue are exceeding their expenses. And with that particular customer base, and already they are considering partnerships with even other regulated financial service providers. Think about a payment platform. And here, again, the risk now moves from medium to high because the entity is quickly scaling and may not have embedded some form of compliance or corporate practice. So again, there's some form of risk because they have operations, and if you look at it from the corporate governance perspective, then they are not enhancing their corporate governance. You'll get that this company has no three lines of defense. They are really highly focused on the operational aspect of their business, and mostly is driven by a strategy owned by a founder and a few people within the team. Now, then it moves to maturity scale, to maturity stage. Now, once a company hits the mature stage, now they have some notable customer market. They are already developing some marginal profits. They have sought partnership with regulated entities, and maybe in one or the other have obtained um, a license. Now, this risk now goes back again to moderate because they have customers, they are more established, they have already established compliance, governance, and corporate practice forms. So where we always see a lot of risk is where you will be able to see at that level of scale. Now, the companies that will be knocking your doors for a regulatory sandbox will be companies between the growth and the scaling phase. Those guys that are trying to do a proof of concept phase. So think about these two levels, growth and scale. And this is where you will see that there's a bit of risk around it that you really need to start thinking about from a regulatory standpoint. I'll pause there and check whether there's any question. If we are okay, then you can put a thumbs up or you can unmute and so that we are following.
Elias, just can you remind me what does it mean POC, please?
Proof of concept.
Okay, thank you.
Yeah. All right. So I think I'll
Yes,
go
we
to the next.
have a hand up
Yes.
from
Yes.
Leroy. Leroy, you have a question?
Thank you. I wanted to ask in terms of the stage, the expansion stage, and the initial stage. You realize that most innovations will probably come from individuals, and probably in the insurance sector, you realize that they are not among your regulated entities. So when they then graduate from being an idea to full scale, is there a requirement then that if it's an individual, it has to partner with an existing regulated companies, or you can then allow that individual to then look for customers in the market, or they have to partner with existing players, be they in streamline operations or any innovation that they came up with. Thank you.
Yes, so that's a very good question. And if you look at what happens in many phases, you'll get that between the initial ideation phase, then you'll get that mostly there are incubators there. And what incubators do at that particular stage, it will start help these individuals to start formalizing like a team. And you'll get that there are a number of ways that incubations are done. You have an idea, you have an early stage startup, then you'll get that the incubation kind of helps you to start building a team that will support you to product develop. So it kind of opens up the ideator to an opportunity to start formalizing a team around him for the purposes of developing the product and kind of really looking into in the initial testing. Then when we kind of move to the expansion and POC phase, then here is where we get accelerators. Now, Bima Lab is an accelerator that really looks at growth and scale organizations that, one, are seeking investment opportunity, two, want to refine their products, three, they want to get more, more opportunities and kind of connect to different partnerships. And that's the goal of Bima Lab. Connect to investors, connect to strategic partners, and also enable refinement of solutions. So most of these guys will start from an individual perspective, but due to the ecosystem play, then the ideas soon move from an individual to a setup of a team. So you'll get that there's a founder and there's a co-founder, and the co-founder and the co-founder has like a small team around them. And then as kind of it grows, then you'll get a CTO coming in, a chief technology officer, you'll get as a business development guy coming in. So it kind of now starts to expand into some form of an organization or a small company. Because again, if you look at it from an insurance standpoint, then it doesn't really work well if it's an individual running this. So importantly here is for you as regulator to clearly understand where this innovator is at and what do you really need to do. So I'll go to the next slide and kind of now expound on what you need to do as a regulator. Now, you can all do two things. It can be a passive engagement or it can be an active engagement. And these will depend on the nature of regulatory intervention that will be applied based on the 5 things that we've talked about, the 5 stages. So think about it if it's an ideation, formation, or a startup. And here, what I usually tell the regulators to do is that you just need to observe and understand what emerging innovations are coming up and really asking yourself, are these ready to go to market? And even really understand some of the key barriers facing early stage insurtechs. That's what we do most of the time based on this engagement with insurtechs through the Bima Lab program. What are the barriers? What can we do with them? What are some of the things that we can provide them in terms of guidance? So once a company moves from ideation to startup, then the level kind of expands. It's not only observation, but you have to guide and advise. And these will be proactive guidance to market, to the potential market entrance on the available licenses. I did tell you that there is need to clarify the regulations. You can really give them reactive responses to regulatory questions they are posing. And that kind of gives them the ability to start thinking through their processes and because they're still trying to build a team, they're still developing products, they're still trying to know what kind of customers are we going to engage. So a lot of passive engagement. Now, once this company moves to the growth, scale, and mature stage, then active engagement comes in. And if you can recall, we had different levels of risk. Ideation and startup phase is low risk. The growth is medium risk. The scale is high risk. And mature is moderate risk. Now, the risk level has gone up. And there is some form of regulatory oversight that will be required by the regulator. So, for instance, if it's at a growth stage, then you should enable some responsible access to market. And this could be in a number of ways, either directly licensing them, or you can use a regulatory sandbox through a test and learn. And then the other thing is that across the market, from growth, scale, and mature, proactive regulatory guidance is important. So you'll work with these insurtechs, fintechs to help them understand regulatory requirements. How do they need to apply? Provide guidance on how to apply, and also have some form of supervisory oversight, monitoring the activities of these regulated entities to ensure that they are complying with some regulatory requirements and meeting objectives of the regulatory framework. And these will only happen if you have some form of regulatory requirements for them. So is it a sandbox, is it a test and learn, or is it some form of a license that you're providing? I'll pause there and check whether there is any question on this. Or comments, or what maybe you've seen in your markets.
Yeah, we have Rita. Rita, proceed.
Hello, good afternoon.
Good afternoon.
Okay, so Elias, just a quick question. Is it prudent for the regulator to charge a fee, especially when it comes to the monitoring bit? Because some of them are products, we need to study how they are, the claims ratios being reported, the traction being reported, premiums, all these things would have to be done by, say, a particular unit, for example, the actuarial unit. And these are man hours or resources that are being used outside the normal working hours. Is it prudent for the regulator to charge a fee to a player in the sandbox to perform that monitoring role?
Yeah, so thanks. I'll give you a very practical example. I've been involved in drafting the sandbox for Nigeria, and what we agreed with the Nigerian regulator was to really come up with a fee, an annual fee, or then there's also what we termed as an application fee, because again, these are process. But importantly would be to ensure that again that fee is proportionate with the size of the company and the level of oversight that is needed to be conducted. You don't expect to run a supervisory oversight that is intensive as a regulated insurance company, because you won't be doing on-site inspections, you won't be doing a lot of off-site inspections. This is more of as need be, and also some of their products are as not as extensive as it would require a lot of fee charge. So again, it should be a modest fee that kind of enables also the company to make sure that as they are pushing these documents to you, they don't just send them for the sake of sending. They will be quite serious in terms of what they are providing. Yeah, so it's in some markets, there's a fee that is charged. Right. All right, let's get to the part one of what we are going to discuss today. And this part will really look at different sandbox models, their use cases and attributes. And there are so many types of sandboxes that we can talk about. Importantly, is that each and every sandbox will have its own unique way of application and how then they relate to different markets.
Elias,
Yes,
you have another hand raised. I have Natasha from PIA. Natasha. Yes.
Thank you. So I just wanted to make a comment concerning the fees. So currently for us as Zambia, we are coming up with the sandbox guidelines. We anticipate that we'll launch first quarter of next year, and we'll start calling for applicants at marketing the sandbox the last quarter of this year. But coming to the fees, we were advised by our legal team that our act has no provision for us to charge fees for the sandbox. So we can't charge a participation fee per se because of our act, But we are trying to see and navigate how best we can charge some kind of amount to the participants. But the best that we thought of so far is something mirroring capital adequacy, where they are required to demonstrate that they have a certain amount, even as they are trying to undertake these activities in the sandbox. Once they demonstrate that, and that these operational fees, they are able to cover them during the testing period of the sandbox, then we are more likely to give them a license. So that's one way that we are looking to navigating the issue of fees on our end as Zambia. Thank you.
Yeah, so again, thanks for that. Again, it depends also with the principal legislation, as Natasha has mentioned, what sits on the principal legislation. Now, if you look at it from a Nigerian perspective, then the regulator has sweeping powers in terms of putting out requirements and laws. Some jurisdictions have some very tight requirements from the principal legislation that really affects the secondary legislation. And when I talk about principal legislation, think about Insurance Act and so forth, and how then that plays. But again, you really need to discuss that within the principal versus the secondary legislation. There are some other places whereby it's even difficult to set up a guidance or a regulation, because again, it's there are so many things that you need to comply with within the law to even set up such standards. Right. So importantly, it would be really good to think about different sandbox models and what are some of the use cases that you can anticipate from a regulatory perspective. Now, there are different ways in which sandboxes have been set, and most of the time, the key thing that comes in mind is that we are setting up a sandbox to really allow innovators to have a controlled environment. So when we talk about controlled environment, we are providing a supervised or a controlled space where businesses can test innovative products, services, or solutions. And here we are looking into having some form of oversight to manage risk without really putting the whole weight of compliance to this organization. So that's the first thing. We are just providing a controlled environment to the company. The second thing is legal and regulatory flexibility, because again, with this level is that you are offering a temporary relaxation, or in some cases exemptions to certain regulatory requirements. So somebody will come in and start underwriting some risks without having the required capital, and you just require this company to have some form of quantum to enable them test the innovations that might not be readily be addressed by existing regulations. So again, enabling tests for new ideas or solutions without really having any clauses within the law that would authorize that. Then the third thing on a feature of a sandbox, it has to have a defined testing parameters. So whenever you are setting up a sandbox, you really need to know what is the scope of the sandbox, what are the objectives of the sandbox, and what are the metrics for testing period. And these would even include the performance indicators that will measure success or failure. Because remember, you're allowing these people to test within a space, and you should be in a position as a regulator to know, is it a success or is it a failure? And when you see that failure is going to have a very big impact, you can be able to stop these innovations before they become more entrenched and kind of push you to bigger regulatory challenges. Then it's also very interactive approach. It is continuous. It is an experimentation. It requires a number of iterations during which you can allow for adjustments, you can allow for responses to different findings that you get. So it is not a linear path. You know, if you look at it from the normal regulatory requirements, whereby you know that if these will move from point A to point B, for these sandboxes, that's not the case. It can move from point A to point Z within a few months. And then you decide, okay, fine, we need to really think through around how then we can stop this or we can support their growth. That's why it's important to really think about performance indicators. Then risk management is another thing that you have to really think through. From issues around protection of customers, are there safeguards to do that? Market stability, and how then do you maintain that? There is need to do that. Then also data security and consumer data protection is key. So balancing innovation with risk mitigation will be an important exercise that as a regulator you will have to do. There are other features that are not major, but they'll be coming from time to time because the first features that I mentioned, those are highly regulatory. These are highly, the second piece that I'm showing up now is highly collaborative and enabling. The first ones are what we call regulatory features. This second piece is more enabling collaborative features. So it kind of enables people to collaborate with different regulators. You'll get that banking, pensions, and insurance regulators might decide to cooperate to address certain benchmarks and frameworks that would be needed for addressing. It kind of also fosters innovation because again, if a market whereby has a regulatory sandbox, then sandboxes really reduce barriers to entry, and most of the startups will be encouraged to accelerate their market development role in terms of developing innovative solutions for them to get into the market. Importantly is that it's also something that really attracts investments because both private and foreign investments will look at issues around legal certainty. And if you think about the stages that we had, so think of a company that was at growth stage that has been given a license. This company can easily do further fundraising because the investor will have a confidence that the company would get to the next stage. So pro-innovation regulatory stance really builds a lot of opportunities for these innovators. The other thing is inclusivity and accessibility. It kind of provides an open, wide range of participants, which will include startups, companies, international entities, and this really ensures that there is fair opportunities for participation. So again, really enabling different actors within the ecosystem to really get an opportunity to deploy their innovations. Then knowledge sharing is another element whereby companies will have an opportunity to share knowledge between participants, regulators, and other stakeholders, and enabling what we call regulatory evolution. One of the key things that I keep on saying, and you'll be able to see in most of the forums that I've attended, I usually say that sandboxes is whereby a regulator tests his future regulations. So if you are doing a sandbox now, you are just testing what your regulation will look like in the future. And also you'll kind of now start thinking through if companies do this will be the way I'll be responding. So it kind of gives you an opportunity to test your future regulations and requirements as you kind of navigate the challenges that most of these companies face. Now we have different types of sandbox operating models. And I know most of us already have different sandbox operating models. So we have the first one is a cohort model, and I know this is also applied by the National Insurance Commission of Ghana, whereby they kind of have a window for applications to be submitted. And that window really gives companies that are really looking into deploying the solutions to the market to put forward the applications. Now, the advantages of this, it kind of enables you to have a focused testing period, and it's usually quite easy for you as a regulator to manage. Now, what are the disadvantages? It really excludes applications outside a cohort window. So if somebody wanted to apply now, you'll have to wait until the window is opened. So Bank of Ghana does it, FCA, Financial Conduct Authority in the UK, whereby there's some form of thematic sandboxes. Then it kind of limits when you have to do it within a specified time. Then we have a rolling model, whereby applications are accepted anytime. It allows flexibility for innovators to propose solutions, and also it has some even outside predetermined themes. So here there's a continuous application. Then this means that you have to set up an innovation department or a Insurtech department that will be looking at these applications as they come in and they fall due. The disadvantage is higher administrative burden, because you'll have to really think about it most of the time. Singapore Monetary Authority really applies this rolling model. Then you have another model that we call theme-based model, and this focuses on certain specific issues. You can say, okay, fine, let's do a sandbox for sustainable finance or green finance, or say parametric insurance, or say gender intentional products. You open that because it's targeting a specific problem that you're trying to solve. Now, what the disadvantage, then it will kind of exclude out of theme type of innovations. What we've seen in the market is Financial Conduct Authority's Green FinTech Sandbox that really focuses on green technology and green innovations. Then we have other models whereby you'll have what we call a universal access model. So this is a model that has an open access for all innovations as long as regulatory requirements are met. So, it's like, do you have an innovation? Okay, fine. As long as you can comply with these requirements, then you can be able to use it. So Dubai International Financial Center kind of has that. It is highly inclusive and flexible. The only thing is that you kind of get a very varied number of applications for your market. Then we have a predefined milestone model whereby participants test product in stages with progress evaluated against set milestones. So you kind of get a predefined milestone that has been set. It kind of ensures that there is a form of structure that it will be used to measure progress. The only thing is that those low innovative solutions will have very rigid milestone requirements, and in this case, then they might fall off. The Central Bank of Kenya has this type of model. Then you have peer group model, where entities are invited to work on similar solutions and they're admitted together. And this kind of builds a lot of collaborative and kind of a highly insightful way of managing solutions. It kind of promotes collaboration and knowledge sharing, and kind of also ensures that the market builds solutions that are highly inclusive. The only challenge is then there are issues around intellectual property concerns, and we've seen the FCA's, the Financial Conduct Authority's peer-to-peer lending sandbox model that kind of deploys this solution. What I want you to have in mind is that I'll ask all of you guys to say which model you are applying, or in case you get into the stage whereby you need to do a sandbox, which model would you recommend? So kind of take note of these models. The last two is what we call the cross-sectorial model. So this is whereby there's collaboration with multiple regulators trying to say, okay, fine, why can't we come together to test cross-border or cross-regulatory innovations? So it kind of encourages more complex integrated innovations, and also reduces what we call regulatory friction. Now, let me give you an example. Assume that there's a company that wants to do insurance, and in this case, they want to do agriculture insurance that is bundled with credit. So remember, they are going to provide some form of loans to the farmer, and you all aware, if you are providing banking solutions, then you require a banking regulator, because this company do not want to do a partnership with a financial institution. They want to do it themselves. On top of that, they will create a platform that will enable payments. So again, there is the need for them to work with the banking regulator. So there's payments in there, there's credit, there's insurance, and this kind of enables them to offer an integrated solution to the customers. How does that work? And they want to operate within a sandbox. Now, where we've seen in different jurisdictions whereby in case of such, then the regulator, the primary regulator, will ask the company to go for a letter of no objection from the other regulators, and then they will be allowed to test the solutions. So some regulators are currently thinking about a cross-sectoral model, whereby you can bring all these regulators and ensure that you test a particular model. So the only thing, the biggest challenge here is coordination amongst regulators. So that is a very difficult exercise when you kind of look at challenges among regulators for the purposes of ensuring that the complex application process is there. So EU Digital Finance Sandbox combines financial data protection and competition regulators to work around it. Then we have a hybrid model, which combines sandbox testing with support services. So you'll get that there are innovation hubs. There is also support on mentorship and funding. These were now, you'll get that Bima Lab comes in to support regulators that might not have resources to foster ecosystem development, because one of the biggest advantages around this model, it provides end-to-end support for innovators and fosters ecosystem development. The disadvantages around it is highly resource intensive. You have to really put money, and again, there's potential overlap in the roles of Sandbox and Innovation Hub. The other biggest challenge that comes in is what we call reputational risk that you take, because if something fails on the sandbox, but you as a regulator, you incubated it within your regulatory area, then these companies can say, but you are the one who provided us with funding, you're the one who provided us with mentorship. So we would really put an equal blame to you as a regulator, because you really you are the one who also helped us to do this. So Hong Kong FinTech Supervisory Sandbox is integrated with a FinTech Innovation Hub within their business model. I want to pause there. Again, I want you to go to the chat and write your regulator and what model you would want to adopt. And then what I'll ask Alex to do is to pick all those results and kind of put them in a word art using Slido, and see where most of us are looking at. You'll just pick the model only. So yeah, let's go quickly into the chat. I'll stop sharing, because I would want to see what's on the chart for us to see quickly what all of us are indicating. I'll give that but let's move to the next. Right. The key thing would be we've talked about all this. What are some of the success factors in implementing a regulatory sandbox? And I know if you guys will be going to your board, this will be a very big question. Like they'll be asking, okay, fine, what are we getting out of this? Or what are we getting ourselves into? You know, it kind of enables a cultural mind shift towards what we call an experimental regulation. And I did mention earlier, regulatory sandboxes gives you an opportunity to test your regulations for the future, and kind of building that around what your future regulations will look like. The second thing is access to funding. And this funding will not come to, like, say, to you directly as a regulator. If you look at fintech funding across Africa, the largest funding in the year 2024 went to Kenya, followed by South Africa, then followed by Nigeria. And somebody will ask, okay, why was this the case? Now, if you look at the Central Bank of Kenya and the other regulators in Kenya, the capital markets, the insurance regulator, all of them are highly pro-innovation, and it kind of encourages innovators to test new things. And given there's no uncertainties around the regulation or the innovations that are being developed, then they do a lot of fundraising that kind of goes into those particular markets. So a lot of private sector investment initiatives will be deployed. So in terms of mobilizing fintech capital, then that's something that would experience. Now, somebody will say, okay, fine. Why have I said UK private sector initiatives? The reason I'm saying that is because, ideally FSD is highly driven through the UK investments. But again, this funding comes from different venture capitals, companies across the world. Let's see how 2025 would be. And one of the key things that this funding has been increasing over time. So regulators can really lead way around that. And what does that mean? If you kind of attract funding within your markets, it means more employment, more opportunities for growth of institutions, and also in terms of balance of payments. The other thing is multi-agency collaboration or coordination for regulatory coherence. It kind of gives us an opportunity for regulatory clarity across the financial markets. It also enables you to build multidisciplinary or interdisciplinary teams, from legal to technical to economic, because you see, with the innovations, including IT, it kind of gives you that requirement that you need to be cross-looking. It kind of also provides a momentum for post-launch to sustained interest and outcomes. So as you kind of get these sandboxes set, then you kind of see a lot of products being launched, and the launch of this particular product kind of becomes more sustainable because there's some, support that the organization can always be given an opportunity to further test or scale their solutions. It kind of also builds some relevant economic sectors, digital ID and generative AI. If you look at Dubai or the United Arab Emirates, they have gone ahead and even have a minister for AI, because that's the future. That's where they know. Some countries have gone ahead and come up with a minister for digital economy. and digital economy is taken in as a very important sector, economic sector. So I'll give you an example. In Kenya, close to 20% of of Kenyan GDP is driven by digital economy. Think about mobile money and payments as a platform. Kind of gives us close to 15 to 20% of the GDP. So digital economy is huge. Also, there are currently new emerging economic sectors that focuses on natural capital, sustainable economies. So again, very relevant sectors that require a lot of testing. Think about things like carbon markets and how then do we, encourage use of carbon to the growth of carbon markets and carbon insurance within specific markets, then that will require a lot of sandboxes. Also, it enables the sector or your countries to get strategic alliances for resource sharing. And we've seen organizations such as FSD Africa, World Bank, and Global Finance Initiatives, Innovation Network, GFIN, really building a lot of strategic alliances. And that is the reason why we're having this discussion, really kind of sharing our resources and building strategic alliances. And lastly is flexibility in frameworks and processes. It kind of enables that dynamism within the market play. So let's go to the next. And this will be an exercise for all of us. I don't know, Alex, how much time do I have? Alex?
You have about 25 more minutes.
All right, let's see.
Okay.
Okay, fine, guys. I want us to do like an exercise, and this would be really to help us envision a sandbox. And we have two questions. And these will be, I would want us to have two groups. And Alex will be able to give us those two groups to help us do this. So Alex will put you guys in two groups. And the assignment is these two questions. What are the specific objectives for the sandbox what are the specific objectives for the sandbox to achieve given the unique ecosystem drivers and challenges discussed, and this is not yesterday, in this session. Then the second thing would be, how do you see your sandbox contributing to your regulators' activities and priorities? Alex, if you can break us into two groups, then we'll kind of have some few minutes. I would say like 5 minutes to try and answer these two questions, and then we will get back into the discussion. So Alex, if there is a way, if you can break us into two groups, and then we can discuss these two questions. These rooms will be led by Neil, and the other room will be led by Alex. Alex, are we all back?
Yes, we are. Everyone's back.
Some people decided to leave the room from the second room and decided to go home.
We are back, Elias. We are here.
Okay, fine. Hopefully no one has decided to leave the room, decide to take another. So I think we'll just go straight to your discussions, and maybe we can start with group one that was really looking at what are some of the objectives for the sandbox to achieve given the unique ecosystem drivers and the challenges discussed. So what are some of the specific objectives that team has come up with? It will be good to hear the first team, then I'll invite the second group
Was that our group?
Yeah,
Yes,
so there was room one and room two. So Alex.
Okay.
yes, it was. That was your group, Neil.
Okay, got it. We had some very good discussions about the challenges and some of the drivers. And I'm going to reach out to Justice and Natasha, Ida, if you can share with the rest of the team some of the points that you brought up. That would be great. How about you, Justice? Justice, you're on mute if you're trying to speak. We can roll into Natasha. Natasha, can you share with us some of the points that you've brought up?
Hello, thank you. So I mentioned to say that we are in the process of drafting our guidelines for Sandbox, and we should take off towards the end of this year. But one of the challenges that we have faced is the issue of the target participants, exactly how that should look like. So for instance, we are alive to the fact that we're trying to promote innovation in the market, but there was also certain reservations concerning protecting consumers, and different opinions came up at the time we were drafting our guidelines to see what sort of target participants would have. Do we co-opt pure fintechs who may not have an existing license? Or do we co-opt fintechs that demonstrate that they are going to partner with an existing licensee on the market? And so far, it looks like we may opt initially for the option of fintechs having to partner with an existing licensee in our market in the event they don't have an existing license with PIA. But that also may exclude some fintechs that may have very good products that they may want to test in our sandbox. That's been one of our challenge in drafting our regulations. Thank you.
Thank you, Natasha. Ida, can you share?
Yeah, so for some of the objectives that we mentioned for our sandbox was one, to accelerate understanding of the emerging insurtechs with the recognition that in most cases our regulations are catching up with innovation. So the easiest way to understand the market is through the sandbox, through monitored testing of the innovations. Then also we agreed it's a good way of balancing consumer protection and encouraging innovation so that we ensure market stability. And then the other thing we mentioned was the importance of our regulations growing together with innovation, so that, and maybe as Natasha has mentioned, you realize that if we have insurtechs going through the sandbox and they've exited and there is no license category for them, it means it's either they are partnering with an existing regulated entity or they have a license category. So as we grow the innovation through the sandbox, we're also trying to grow our regulations so that they are able to better support innovation in the industry. Thank you.
Thank you. So Justice, are you able to give your, let's see, is Justice still with us?
Yes, I'm here with you. Sorry.
Oh, okay. That's all right. Yeah, if
Okay.
you could share. Yeah.
Yeah, I can hear you. So I think we also spoke about strengthening consumer protection and also building trust. One of the key objectives that we have, because the Sandbox gives us the platform to be able to test to see whatever we want to bring out, how it's going to protect consumers. And we know as a regulator, trust is key to us. We already know Africa insurance industry, we are struggling with trust issues. So whatever comes out, we have the Sandbox to be able to test to see some of the issues that probably might not work well when it comes to consumer protection and building trust. Yeah, so that's also another objective that we spoke about.
Okay, thank you, Justice. Okay, back to you, Elias.
Thank you,
So
Neil.
thank you guys very much, and I hope we will capture those good responses, really to kind of lay them out in like our chat for us to have them as on the board. Then I want to invite the group two. I think we have like 4 minutes before we close. But also importantly, I would want to show you guys what we'll be doing next week. So we'll go into Sandbox design parameters. So it will be good again for us to attend the session and next week. But before we get, as I mentioned, we might need 2 weeks to get this until to that particular point that we are going to design a risk Sandbox application risk assessment tool, because we want to design a tool that all of us can use for assessment of this. But we'll need to start thinking about the design and then kind of get into the risks, then design a toolkit for risk assessment. But before we do that, then it will be good to hear group two. But I just wanted to kind of lay out our plan for next week. Group two, Alex, this was your group.
This was my group. Unfortunately, I did not stay too long in it, but I think I'm in very good hands. I had Kagiso and I had Saad, and if you can kindly share with us what the discussion entailed, I would appreciate it.
Yeah, just quickly, I said in the my colleague Lina and I, we said that in Morocco we we still don't have an operational Sandbox. There are for the insurance sector, there is a Sandbox in another area, but not in insurance. However, our authority has created an innovation and Insurtech unit dedicated to promoting innovation and developing the Insurtech ecosystem in the insurance and the social welfare sector. We not to say what like we are aware that a regulatory sandbox will represent a key enabler for aligning innovation with the supervisory priorities, and for regulators such as ACAPs, a sandbox will contribute directly to core priorities by strengthening risk-based supervision, promoting financial inclusion and innovation, and enhancing regulatory agility. It's just a small summary of what I said in the group. Thank you.
Thank you. Anyone else with another opinion to share with the group?
Maybe I can add something to that. So, like I said, when you were in the room, at ACAPS we have many priorities apart from the regulation side of things. For example, we have consumer protection and the development of the market and products available to the public and financial inclusion, etc. So in my opinion, a sandbox can really help steer the market in the right direction and help set examples and standards to follow when it comes to consumer protection by, for example, helping to balance the products from the start and accompanying these companies to create balanced and fair products. It can also help developing new products in areas that are needed, for example, when it comes to agriculture products and catastrophic events and gender approach in insurance and helping rural populations be protected. So by choosing and helping certain innovators in certain domains, it can really help us to go further when it comes to financial and insurance inclusion. There's also the aspect of modernizing the sector, which is another priority of ACAPS. So using technology and digitalizing insurance to create more value and profit from the possibilities that technology offers. So these are all things that a sandbox can help achieve because it gives us the power to really pick the innovators who are going to profit from this regulatory help in a certain way. And that's it for me. Thank you.
Thank you, Lina. Anyone else? Kagiso, any thoughts?
Yeah, I think just to maybe add on what she had mentioned about market development, I think I'd expressed in the group that what's become my observation in amongst the local regulators is that the aspect of market development and growth tends to be under prioritized as opposed to the enforcement and compliance aspect of things. So you find that regulators have just relegated themselves to the role of being the providing oversight and not exactly taking it upon themselves to say they have a role in a role to play in the developing of the markets that they regulate. So I feel like sandboxes would provide a good avenue for that aspect in that you'd be able to at least allow for innovative and new products or business and delivery channels to be tested and put out into the market. And even the pace we're talking about, because I know we say this a lot that regulation follows innovation, but I think the pace at which regulation follows tends to be left wanting for the most part. We can do much better as regulators, and I think sandboxes would really allow us to be able to keep a good pace with innovators.
Thank you, Kagiso. Yeah, Elias, I think that's from some of the discussions that we had in room 2, in addition to what was said from room 1.
Yeah, so thanks, guys. I think we are on top of the hour, 1 hour and a half that we've spent. Next week, we'll be jumping into sandbox design parameters and developing the toolkit. So I would urge all of us to purpose to attend. If you have colleagues that you think that those would be a good exercise for them, kindly encourage them to join. We will kind of go into a bit of developing a tool. So if you will have an opportunity to have your laptop with you, it will be great because we'll try and kind of generate a toolkit that we can design for the purposes of risk assessment. So thank you, and looking forward to connect with all of you next week. Thank you.
Thank you,
Elias, and thank you, everyone.
Thank you.
For joining the session. Thank you again. Thank you, and see you next week.
Thank you. Good evening.
Thank you, everyone.
Thank you.